Hey everybody, so in this video we're going to take a look at Intel Q2 earnings plus their guidance for the full year of 2022. So let's just take a look at the numbers real quick. So if we're looking at revenue, this is going to be in billions. So for Q2 of 2022, we came in at 15.3 billion. Now we're comparing this to Q2 of 2021, which is 19.6 billion. So we're actually down 22% year over year. Gross margins, we came in at 36.5%, and Q2 of 2021 was 57.1%. So we're actually down 20.6 percentage points. If we're looking at operating margins, we actually came in at negative 4.6%. Last year, same quarter was 28.3%. So we're down 32.8 percentage points. So far, these metrics do not look good. Now, if we're looking at earnings per share, we came in at negative 11 cents when last year's quarter, we actually came in at $1.24. So we're down significantly on that metric as well. So reasons for revenue and margin decline. So their customers are actually trying to reduce their inventory. So for Intel, that essentially means that they're not going to be selling as much because their customers don't want to hold on to all this inventory, especially right now. And when we're looking at operating income or just margins in general, their increased unit cost is cutting into their margins as we saw before. So, they're blaming prolonged supply chain challenges and things of that nature. So we will see if this does actually get a little bit better in the future here. Now let's take a look at year over year revenue growth. So for a full year of 2022 guidance, they're looking at revenue of 65 to 68 billion, as you guys can see right here. So I decided to choose 65 billion just because I want to take a conservative approach. And they also gave us full year guidance of $2.57 for earnings per share. So if we're looking back here in 2010, we're seeing some pretty good revenue growth. And this was over 20%. Significantly fell in 2012%. Went back up in 2018. Now the current trend is very, very negative, as you guys can see. So PE multiples. So I went ahead, pulled this chart from Yahoo Finance. It goes back several years. And if I'm just looking at this chart, I can see that PE multiples like to be around 8 on the low side and 12 on the high side. So because they gave us full year earnings per share guidance, they also gave us Q3 earnings per share guidance as well. So just with those two numbers, I was able to calculate a Q4 forecast, which I'm expecting to be about 58 cents here. So what we can do with all of this information is we can actually calculate the forward PE based off of today's prices. So if we're just looking here, today's price is $36.31. So what I can do is I could divide that by the full year guidance of $2.57. That's going to give me a forward PE of 14.13. Now, if we're looking back on history, that does look a little bit expensive. So if we do want to get that 8 PE based off the full year's earnings per share, we could see $20.56 to the low side. To the high side, which is 12 PE, that could be $30.84. So essentially, if we're just following this, then yeah, Intel can probably fall like another 10, 15, 20% from where it is right now. So I do kind of feel like there is more downside, but this does get a little bit confusing because we do have some future tailwinds for us. So let's go ahead and talk about that real quick. So the Chips for America Act, this actually just got passed. So let's just talk about this a little bit. So Intel CEO Pat Gelsinger said that they're now ready to move at full speed just because of what just got passed in Congress. So the bill known as the CHIPS Act It's heads to President Joe Biden's desk for his signature, and it actually got cleared on the U.S. Senate this week. So it's going to allocate more than 52 billion in subsidies for companies to research, design, and manufacture semiconductors, and it's also going to provide a 25% tax credit for companies that build facilities in the U.S. Keep in mind that Intel is actually going to build 2 factories in Ohio. So now we see Intel announced in January that it's going to invest 20 billion in those 2 semiconductor factories in Licking County, and they plan on employing about 3,000 workers. So Gelsinger actually said that they could invest up to 100 billion if the aid package is approved by Congress. So that I'll take that with a grain of salt. But 20 billion, I'm pretty sure that they'll invest at least that much. So let's take a look at their balance sheet. So if we're looking at their total current assets, it's sitting at around 50.6 billion. Their total current liabilities is about 27.2 billion. So balance sheet looks pretty good. It's almost sitting at a 2-to-1 ratio. So keep in mind, total current assets is their most liquidable assets, whereas total current liabilities is what they have to pay in the shorter term. So if we're looking at cash flow statement, what they're bringing in from operations in the last 6 months is 6.7 billion. Now, last year when we're looking at the last 6 months, we're bringing in 14.14 billion. So this number has gone down significantly. So that's not necessarily a good thing here. Now that basically ends that part. So let's take a look at the actual chart here. So I do see something very interesting, and this is why I wanted to cover Intel, just because of what I'm seeing in the charts here. So let's look at the shorter time frame first. So as we can see, we saw a huge gap just from that very bad earnings that we got. So this gap is, let's see, it's about like a $4 gap here. So yeah, we fell about $4. And if I go on a longer time frame here, so this is actually the monthly chart. So every single bar represents 1 month, as you guys can see here. So if I look on the monthly chart, we do have this line of support. So, we bounced off right here, bounced off right there, and look where we're at right now. We're like basically sitting right there. So we're about to end the month sitting on this support line. So, oh boy, I mean, if we fall underneath this and, we get a monthly close underneath the support line, I do believe that, that could be a sign for further selling. So back here in late 2017, we saw this massive rally here, and then we started building out support right around this area. So this area is right around like $39. So you guys can see, we're holding this up pretty well. But recently, we totally broke through that support. Now we're on this longer term trend line. So, things are a little bit interesting in Intel. Definitely shorter term headwinds, longer term tailwinds. So I hope you guys enjoyed this video. Leave a like, a subscribe, or just comment down below. And have a great one.